been exactly a week since the central governor said that, well, what you're seeing in terms of the Cedi appreciation is just a short blip, or it's just a blip, and that will be corrected soon. But a week after that statement, we've been monitoring the performance of the Cedi, and unfortunately, we are seeing the depreciation going on and on and on. And if you go to the black market or even some, forex bureaus, the Cedi or the dollar is now trading around 12 cedis, 80 pesos, and some even saying that 13 cedis. This afternoon on Beyond the Numbers, we're asking a very simple question: is the Cedi on another round of depreciation? And we will consider that range that was given by the president, who said that he believed the natural level of the Cedi should be between 10 and 12. And as usual, the two strong men will join me and we'll go to the smart wall very soon to do the analysis. Winston Taki and Caleb Ziblim are with me, and the conversation again is on the Cedi. Let's go to the smart wall, and Winston, I want to start with you. So far, last week we saw the governor very confident, and he said that, well, this is just a short blip. And in fact, he said that it will be corrected soon. But per what we are seeing in terms of what we've been tracking so far, it doesn't look like it is stopping. Do we see anything going wrong in the market, and what is actually influencing this at the moment?
Let's probably take viewers through some few refresher analysis of how the Cedi has performed since March 2025. And we can see from 14.7 Ghana cedis, it hit to 15.5 Ghana cedis. Since May 2025, the appreciation began, and that has been favorable for quite some time now, when businesses were consistently asking, can they sustain that stability? I mean, we're demanding that this was affecting their investment. Pricing at the port, goods and services, export and import, all became quite critical. Even cocoa prices became economical conversation, where some of the farmers were saying if the Cedi was at 15 Ghana cedis, they would have been benefiting, but because it's a major component in calculation. Since then, we saw drop in crude oil prices, petroleum prices at the pump became to depreciate, and we saw those marginal prices in commodities as well. This correspondingly was responded with inflation and all the factors that led to where we are now. As at this morning, last week it was around 10 cedis, 75 pesos. This morning it's around 10 cedis, 11 cedis basically. And this has been the new trend. But many have questioned by what businesses were saying that possibly the new directives from the central bank brought about some kind of anxiousness in the market. Many were asking the ripple effect of those policies. Some have also been projecting that is because there were huge demand for dollar from the central bank, and meeting those demand became quite an issue for some of the businesses. Many also were kind of not sure about whether they can have enough, and therefore they were anxious, waiting on whether the black market is willing to step in. But it appears the central bank has consistently been attacking speculations by making sure there's always information to that effect. And with that gap always being filled, it appeared the central bank has been in control for quite some time now, until we started seeing this seasonal blip that the central bank governor said can be resolved.
Well, that is the blip, and that's the story so far. Winston has given us the trend. But your own perspective, what do you think is the story behind the curve that we are seeing on the smart wall?
The rise you can see here happened in just 3 weeks.
Yeah.
So within 3 weeks, the dollar to the Cedi rose from 10 cedis, 60 pesos thereabouts, to now 11 cedis, 75 pesos. And even on Bloomberg, it's now 11 cedis, 95 pesos. And on the black market, you see 12 cedis, 95 pesos. Or Abuchi, 12 cedis, 95
yeah.
pesos. That's almost 13 Ghana cedis for $1. And it's interesting because if you look at the trend again, at this point, in the first 3 months, the BOG intervened with $1.4 billion in the first 3 months of the year.
Yeah.
And in the first 3 months, it was stable at 15.5. So we are assuming that the BOG intervened more when it dropped from 15.5 to 10.3. So now this current depreciation we are seeing from 10.6 now to 11.75, it could be because the BOG has stopped intervening as much as it was intervening before. And if you look through the IMF policy that we signed up to. The BOG or the government committed to providing the IMF with a policy document on how they are going to intervene in the forex markets, and we are September. So that could also be some dynamics at play there. The BOG has now committed to a policy on how it's going to intervene in the market. Because if you look at the supply of dollars, they have not stopped. Gold prices, and we'll get to gold prices very soon. Yeah, gold prices, all-time highs. Ghana is still the #1 Africa producer of gold. So we're enjoying the $3,400 per ounce of gold since 2021 to 2025. That's the highest we've seen. So gold is still coming in. Cocoa prices still remain elevated. We are still exporting cocoa, benefiting from higher prices now, which means that the dollars from cocoa sales are still coming into the economy. So supply of dollars should not be an issue for the government. It's about the intervention by the central bank onto the market. Because if you look at the market dynamics, not much has changed since last year.
Yeah, exactly.
Since last year, we've not started producing astronomically that exporters are now bringing in more forex into the economy. We've not. Our industry has not grown that much. The only thing that has sustained this run is because of high gold prices, because of Donald Trump's erratic trade policies.
And cocoa.
So these are the main things that have caused the cedi to appreciate in a long time. And these three main things are still there. Trump is still with his policies in the United States, which has taken gold prices to an all-time high. Cocoa prices are still elevated. We are still producing gold. So for the inflow side, we should be okay. It's about now whether the central bank had decided to take a step back and stop, reduce their intervention into the market.
Well, I remember the Monetary Policy Committee, there was conversation around even the supply of dollars. And the governor was very, very, insistent on the fact that they are giving or they are injecting in strategic areas. So the main thing is to make sure that the commercial banks have the dollars to be able to supply to the market. It is not their intention for the Bank of Ghana to be controlling and be dishing out dollars at every point in time. They want to get to a level where the central banks the commercial banks will be able to step in at every point in time. But we've done intervention since the beginning of the year, injections and all of that. Is this to say that what we have in terms of what is going around or, on the float in the banking industry or the commercial banks is not enough to sustain the kind of demand we have currently, Winston?
It appears the central bank is being strategic in how the dollar flows through the markets. If you heard the last conversation that the governor said that now the mining sectors should now send their dollars to the commercial banks, and that directive seems to bring down some mild pressure. So the external factors also comes to play as in how these mining sectors will now keep their money in the domestic market instead of repatriation. And the seasonal changes also coming through because of inflation. Importers and exporters, huge demand. We are going into the last quarter of the year, and these seasonal changes come through. The ports are now ready to receive more goods. The exchange rate becomes a key conversation during this period. Trump has been on power's neck for quite some time now, trying to show that the independence of the central bank, of the Federal Reserve, is tampered with. But however, we are hoping to see if there's quite some anticipation that there may be a marginal drop in the policy rate in the US, and that will affect dollar prices. China, India, big in terms of receivers of gold from Africa. Yeah. If you look at the gold market, they control because they are key consumers. And the prices of this gold product have gone up because many are looking for safe haven for their investment because of the volatility of the international market. Many are also quite not sure how it will go. For us as receivers, it appears this is to our benefit. Now that the gold prices are up, the new policy the central bank intends to roll out this year, that is the gold hedging policy, is going to happen this month. And because the government was quite anxious that a fraction of the gold will be kept against volatility in prices. And that way, that blip that happens during lower pricing will be short-changed. However, we are hoping that the reserves, which increased by 24.4 in July tons, will certainly be sustained with increment in the gold board, which we've seen how it's working out so far. But I think with time, we want to see the benefit roll out from the gold board initiative, which will reflect on how policy implementation and the local market, because there has been calls from not just the IEA, also from Ghana Gold Mines, as to how they can demarcate to ensure there's sustenance in terms of gold supply, whether small-scale mining, whether medium-scale mining, the kind of categorization that is important to ensure that not just the bigger firms in mining are only benefiting, but the local firms are actually giving out the right amount in terms of taxation. We get to make more, but when you talk about tax returns on gold mine, it's less than 1%.
Well, there are many who are saying that based on what Winston is saying in terms of the international factors that he brought into the conversation, you see Trump trying to tamper with the independence of the Fed, right?
Yes.
And also the fact that the dollar is not doing so well in the international market now. Gold prices are skyrocketing. Why? Because China is learning from what happened to Russia in 2022, where about $300 billion of Russian assets and official reserves were actually locked in international reserve because of the war against Ukraine. China now wants to invest in gold. It's buying on average about close to 100 metric tons of gold every year. And that is what is fueling the demand. And many have said that's what is pushing the price ahead. The many will say that if you look at the possibility of the Fed cutting the policy rate and all of these factors, it means that the dollar is no longer going to be a safe haven because people do not really have that confidence or in the independence of the Fed anymore. Why? Because of what is happening between Trump and Powell. So what they are trying to do is just like what Winston says, to find safe haven. And many have said that, well, if this is what is happening, then it's going to give the city some form of respite, right? And maybe what the governor said that this is just a blip could be true to the extent that we might not see the depreciation going on and on and on, especially looking at the fact that in our economy, the city usually gets a lifeline in the last quarter of the year, where in the last quarter of the year, it records most of its appreciation within that period. You have international factors favoring you. Currently, inflation is around 11.5%, and you are expecting that in the last quarter, things will go well, and many have said that because of this, what we are seeing could be a short blip. I don't know what Caleb also thinks, but I am looking at it on the perspective of international factors and what is even happening in our local space, where almost all the key economic indicators are in favor of our economy, which is supposed to say that, well, you may see some depreciation here and there, but possibly it could be a short-term blip, especially when you look at seasonal data that shows that in the last quarter of the year, the city gets a lifeline. It stays very strong before it even enters a fresh quarter or the first quarter of the next year. What do you have to say? I mean, do you also believe in this analogy, or you think that what we are seeing possibly could go on for some time before maybe we might see some form of respite?
So I think if the BOG wants to bring the rates back to 10.3, 10.5, they can do that. Because the BOG has the muscle to do that. But we're also looking at this from a different perspective. Because if the city was trading at $1 to 10.3 cedis, some exporters say the city is overvalued.
Yeah.
The price of the city is too high. It's affecting their exports. And for an economy to match, the value of your goods will match the value of your currency.
Absolutely.
If you're producing a lot, raking in foreign currency, the value of a currency will go up. But then we are not doing that. We're not a production country. We're an importing country. So, in my point of view, the dynamics of the economy has not changed, that the appreciation or the value of the cedi should be at a low point for a long time. I think the value of the cedi should actually go up, because if you look at even the forex market, the black markets, and then the forex bureaus, even though the cedi was trading at $1 to 10.3, they consistently were trading around 11 cedis.
And usually the difference around 2 cedis, yeah. 1 cedi, 80%.
Exactly.
That, yeah.
So if your central bank trades around 10.3, but then if you are going to the markets, the forex bureaus and the black markets, you are consistently getting it around 11 cedis. You should tell you that the actual value of a cedi is probably not the 10.3 we are seeing. And if it's 11 cedis and that can be sustained, that's fine, because it's all about sustaining the value of your currency. If we can maintain this 11 or 12 cedis for the rest of the year, that's fine by me. But then also, when it was at around 10.3, the only people that were actually benefiting were those paying online do online transactions. If you are paying for Apple Music or Spotify, you benefit from the very low 10.3, 10.5 thereabouts. But if you want the hard fiscal dollars, that's where you have to pay more, because if you go to the central bank, to the commercial banks, you need so many documentations to prove what you're actually going to do with the dollar. If you go to the forex bureaus, you get a higher rate. No, so I think the value of the cedi is not too high at this moment. 11.75 is fine if it can be sustained. And I don't think the value of the cedi is very low at 10.3. That's too much injection from the central bank.
Well, Winston, many are saying that, well, it could be that the central bank is not injecting. Not bringing in more dollars to the market.
And that's my view.
Yeah, exactly. That's Caleb's view, that at the moment, the central bank possibly is waiting and watching to see how demand and supply will play out when it is not really, at this point, it's just being the referee of the game, not taking part, right?
But it's been 3 weeks of the depreciation.
Exactly. They've been part of the play. But now, many are saying that, well, if you look at it on that tangent, wouldn't you say that maybe we could be outside of the bracket that the president gave, who said that he believes it should be between 10 to 12 cities? Do you believe that maybe in some time to come, we may actually go overboard in terms of leaving in terms of the range that the president gave, where he feels that should be the natural level of the cedi?
If you look at the World Economic Report, if you look at the IMF report for 2025, if you look at the most reports that projected the outlook for 2025, all of them were quite optimistic about the outcome of the economies. Basically, for Ghana, the growth rate are projected to increase, inflation projected to decrease, and all the factors, unlike previous years, when we had COVID, when we had international shocks that were direct, Russia-Ukraine war became a key conversation. And if you look at this year, how our budget came out, you realize that every component of the budget were domesticated and were pushed towards infrastructure, compliance, and possibly looking at how the economy would go up, down. If you look at our previous budget, basic foundation, natural resource outlook, we projected based on how our gold prices was going to be. We projected based on revenue, or oil revenue. So all our budgets changed because Trump decided to be a key voice. And it turned out that this goes to our favor. So now we tend to know how realistic our economy is in 2025. And this has been in favor of the central bank because they don't have much on their hands apart from controlling and mitigating the key shocks that may come up. Like we made mention earlier, that the gold hedging program that you're about to institute is something that is a key consideration. Businesses need predictability and sustainability in the market, and that has been the key core. Quite recently, we had the Guta also mentioning that they need to understand the processes involved in holding the dollar, possibly for exports, for buying of goods and services. And these are some of the key concerns that businesses are observing. So the market now is not quite tense as they used to be, because it's now quite predictable. For a while now, for the first quarter, we've seen the growth rate increasing. Inflation as projected. If you look at the figures projected by the Bank of Ghana, it appears we've met the end year target ahead of schedule. And this gives you an indication that the central bank has some more strategies under their sleeves. We keep observing whether they will be able to implement it judiciously to affect not just the financial sector, but we saw the price of goods and services coming down, which reflected in inflation. Both the food inflation and the transport fares became a key trigger in this recent inflation decline. The key issue we keep asking is sustainability, predictability in the long run.
Well, in fact, Winston made an important point, and I want to, switch the conversation to cracking the regulatory whip, which the Bank of Ghana, which we know has been very heavy in the market, trying to crack the whip on those who are not playing the game according to the rules. But if you actually speak to some people who have been trading the dollar or have been in the market for some time, they will tell you that that in itself is also sending certain negative signals that, well, things may not be that all right, and people are hedging and people are taking decisions based on what the Bank of Ghana is doing. And many have said that, well, hitherto I could walk to the bank and not show so many documents and all of that before I can get the dollar. But now I need to show so much to get some dollars. Why don't I just walk to the black market? And we know in economics, when demand is more than supply, even in the black market, prices will definitely rise. Is that really contributing to the kind of depreciation we've seen the Cedi witnessing in the last 3 weeks?
Yeah, and like you rightly said, once the central bank start coming out with directives that are already on the books, it seems they are trying to. It looks like damage control.
Yeah,
they are trying to control something that has gotten out of control. So that outlook is very apt, and I think that what the central bank is trying to do is protect the gains. But then in protecting the gains, you are sending a signal to the markets that something might be wrong behind the doors. So the speculators now are stepping into action. They're trying to get the
and
dollars.
they say, we told you so.
Exactly.
Yeah.
So right now, if the dollar was 10.7 and they start seeing signals from the BOG that they're trying to make it tighter to get the dollars, people will start buying dollars because they know that once the BOG sends that signal out there, price will go up. And once they start buying, they don't stop. Speculators don't stop. And once in the past 3 weeks, we've seen that the Cedi has, which she said, and I think the fastest this year we've seen so far.
True.
Just the past 3 weeks.
This is the longest streak of depreciation we've seen this year.
So if you are seeing this, speculators will double down. But then for the speculators, you have to be aware that the BOG has enough reserves. If the BOG wants, they can bring the risk back to 10.7 because
there's that risk.
Because gold prices are still elevated, cocoa prices are elevated. And also, if you look at the rates that they gave to the cocoa farmers, it was 10.25. So if the exchange rate goes way beyond the 10-11 margin, cocoa farmers will revolt because you are paying them 10.25 for their cocoa. So if now they see that the dollar is now 13 cedis, 12 cedis for a very long time, they'll revolt. So the BOG is aware of this because cocoa inflows are also part of why we are seeing the improved stability of the Cedi. So these are all dynamics that has come into play.
Let's look at where the pressure is coming from in terms of the demand. Many have said that just recently, the finance ministry paid over 9 billion in bond coupons, right?
Yeah.
And a lot of people are asking, treasury bill markets rates no they be. If you go to banks, people call me every day and they ask me, where do I invest? What sort of investment package do you think I can get? And they are not finding it, right? So when that is not happening, you pay 9 billion into the economy. Yeah. It will definitely go and chase after dollars.
And aside that, they've paid ex gratia as well.
Exactly. They've paid ex gratia, and that as well. So you ask yourself, that money that has been pumped into the economy and people are not finding lucrative investment, what do they do with that money? Will you go and chase the less available dollars we have in the system? And many have also said that, well, when the Cedi came down from the highs of 15 to 12 to 10 cedis, a lot of the importers started importing more than they usually will. Yeah. So they started demanding more dollars than they usually would because they wanted to hedge and play safe. And the others were also saying that you are currently running 24-hour, at the port. It means that it's taking less time. It's faster to clear your goods at the port. So people are also importing, and importing. That in itself is also a certain form of pressure on the dollar. And we understand that the BOG is watching this and wants to know how the natural, factors will play out. But just like Caleb said, the BOG currently has what it takes. Because we've all seen the inflows from gold, but although they are not updating us regularly, we know
the first half of it.
Exactly. We know that the projection is that every month they should bring in about 1 billion. Gold is not backing down in terms of the price. Cocoa is doing so well and all of that. Would you say that these factors are actually, really contributing to the kind of depreciation we are seeing in the last 3 weeks?
Absolutely. These factors play a key role. And the interesting aspect that we also have to understand is that the market women, they hold the money. They have the huge sums of money, trust me. Not just the market women, the big people who also into bulk oil distribution, they also buy huge amount of oil into the market. There is always a program for them to be for dollar auction as well. You go to the market, many of them say that goods are being bought, therefore there is the cycle of import happening day in, day out. And therefore, if you go there, and if you, surprisingly, the prices of some of the goods have been sustainable for a while now, until which we are experiencing recently the depreciation. So it's high time many have hoarded their dollar because of the anticipation that there's a possible dip. People will come into the country during December to remember, and they will need some currencies in the country, and there will be need for them to exchange to have some cedis. And these are people just there to exchange dollars for profit basis. So many are also into dollar sales, basically. And these are not people who are licensed by the central bank. Let's not forget, remittance shortfall has also been a key challenge for central bank. The central bank was quite dependent on the remittance shortfall, but they are saying that if the cedi is too good, people will not bring him too much money. And therefore, there should be a little depreciation, so that when people bring $1, they can say, yes, burgers are in town. They can spend more during Christmas. So it has its other side as well, and the demerit also plays a key role. And let's hope that this possibly will not unfold or ripple into other sectors of the economy.
Okay, we just have about 1 minute to go. I am looking at this chart, and it looks like we may be seeing the high levels of depreciation currently, but it looks like the only hope for the cedi now is gold prices. What do you have to say about that as well?
With gold prices, they have been projected to reach about $4,000 per ounce by next year.
Oh.
That's depending on how Donald Trump behaves in the White House. But that's good news for us. But then, as Winston said, if people are taking advantage of the situation to import, you cannot back those imports with dollars. It means your economy does not match the interest rate. It's that simple. Because if people are trying to import things as normal business, and you cannot back it because your exchange rate is too low, it just means that that's not the exchange rate you're supposed to work with.
Well, so just like you heard it, that is the situation of the Ghana cedi at the moment. But there seems to be hope, especially if you look at gold prices. But the big question is, how much are we expecting from gold, and how frequently is the Bank of Ghana allowed to come into the market to intervene? Because we have realized that if you curtail the bank in terms of coming into the market to intervene, we've all seen what happens to the cedi. But the good news is that there could be some form of respite, especially looking at the fact that the dollar currently isn't looking so well, the global scale, gold prices are still very high. We are expecting a rate cut in terms of the US monetary policy rate. And then also, we are entering into the last quarter. Already we're in the last quarter, and the hope is that the cedi will get a lifeline like usually does in every quarter. This has been Beyond the Numbers with me, Isaac Ofeje, and
Winston Taki.
Caleb Zeblin also join us.